The best way to understand long-term care planning is to think about the one statistic to me that really matters, which is there's over 50 million family caregivers today. So these are folks unpaid that their parents probably had a long-term care incident that needed home health care, let's say. They stepped in to manage, their mom's finances. Maybe they come in and they help them with groceries, right? Maybe it's a couple of hours a week, and then it kind of expands as the needs grow. And all of a sudden, that person is a full-time caregiver.
Welcome, Model FAs. David DeSalle here, president of Model FA and your host of the Model FA podcast. And we have Marc Glickman with us today. And we're going to dispel some of the misconceptions around long-term care planning, long-term care insurance, how to actually build a case through more of a consultative process with your clients, while also, sharing how doing this sort of planning can open up the opportunity for you as an advisor as it relates to generational planning within that family unit. So with that being said, Marc is the CEO of BuddyIns. He's an actuary and a national long-term care insurance specialist. Marc, welcome to the show.
David, thanks for having me. I'm really excited to be on.
Love it. Well, let's first give a sense to the audience of your background. So how'd you get into the industry? You're here now. What sort of happened in between? Give us sort of a 30,000 foot overview of your journey.
Sure. So as most people, I fell into long-term care planning. My family is actually very involved in the industry. My dad started one of the largest long-term care reinsurance companies. He's an actuary, and I kind of followed in his footsteps and started with his company and was an actuary for 12 years. So I was involved in designing, developing products for the insurance carriers, working with large agencies to help understand how they were offering it to clients. And I realized there was just a need to add more technology to make it easier to do business with carriers. And so I did it as a startup. BuddyIns was kind of formed from that experience. And we are a national network of long-term care specialists that advocate for planning first, and then solutions, being very open-minded to different types of solutions because the marketplace has really evolved.
Well, it's interesting to hear that someone with that actuarial background then get into the entrepreneurial journey as well. So you got kind of two sides to you, if you will, which is pretty impressive.
Exactly. It's good, though, because people ask me questions about the statistics. I can really give the real answers, right?
Yeah, you can hang in that conversation more than most.
Exactly.
So talk to me about long-term care planning. So whenever I hear long-term care planning, my mind immediately goes to long-term care insurance. And the reality is that insuring against that possibility is simply an option. So when you think about long-term care planning, how does that sort of play a role into someone's overall financial plan from your perspective?
Yeah, that's a great point. We talk about 100% of people can plan for long-term care. You don't have to spend a dime to do it. You just have to understand what's involved. And probably the best way to understand long-term care planning is to think about the one statistic to me that really matters, which is there's over 50 million family caregivers today. So these are folks unpaid that their parents probably had a long-term care incident that needed home health care, let's say. They stepped in to manage their mom's finances. Maybe they come in and they help them with groceries, right? Maybe it's a couple of hours a week, and then it kind of expands as the needs grow. And all of a sudden, that person is a full-time caregiver. And sometimes it's a very successful, high-powered businesswoman who sells her business, quits her job to be a full-time caregiver. And a lot of times that's not what mom and dad would have wanted for us, right? So it really starts with that conversation about what's the reality of what things look like. It doesn't have to be, care in a nursing home, right? Long-term care, 90% of it is actually happening at home or maybe in a higher end assisted living facility. And at the end of the day, if you don't want your kids to become your caregivers, which is oftentimes not the optimal solution, how are you going to finance that? And to your point, insurance is one way to finance it. I estimate probably 25% of people in the US are good candidates for insurance, right? A lot of them may not even have their retirement plans in order to make it affordable for them to be planning for long-term care until they get their basic retirement needs met. But for those that do, they should have something in place, whether it's insurance, whether it's self-funding, but really having a dedicated account set aside to do this, because You don't want to end up in a situation where you're reacting to a crisis, because that's what leads to all these bad outcomes. And we're seeing that as an epidemic today.
That 50 million person number that you shared, it's wild to think how many people are currently playing that role. And I personally know a handful of them where that's happened recently. My grandmother, she's been sort of in and out of situations to where she's needed that care, and, other extended family members. And there's been some of those instances where it's actually brought the family together in this kind of weird way, like through some of the turmoil, people have bonded. But I've seen other scenarios where it's totally ripped people apart. And, there's been people who have moved out of the state so that they didn't have the responsibility of taking care of that person. And I've seen it, really mess families up too. So it's definitely a big need. I guess, my next question would be, as I alluded to already and stated that not just for me, but for a lot of people out there, when you say long-term care planning, their immediate thought goes to insurance. So if I'm an advisor and I have a client where I think it should be brought up, first of all, at what age do you start talking about this with clients? And then second, how do you begin to have that conversation so that it's planning oriented and they don't get the wrong idea that you're just trying to position an insurance product to them?
Yeah, great questions. And this is one of the toughest things. I would say a lot of times what you can do is you can share your personal experience, like you just talked about with your grandparents. I had 4 grandparents that also needed care, and I didn't even realize that, I was a caregiver, right? Most people don't even realize it. So, you just start talking about your own experience, and then your clients start to open up to you. And it's not really an age thing, long-term care planning. It's a personal experience thing, right? We have people planning in their 30s and 40s, right? We have people that have waited a long time and they're starting to plan in their 70s or 80s. And the solutions might be different, right? Their options may be different. But at the end of the day, you kind of have to figure out when's the right time, when it's meaningful to them. And usually our number one profile of a client that's looking at insurance is they've just recently become a caregiver. The second, though, profile is somebody that's recently had a severe health issue. And all of a sudden, long-term care is front and center. But of course, with insurance, that can be the worst time to plan, is right after you've had a health issue. And they might have to wait actually to get their best options. It's really trying to be proactive about it. And to be proactive, it's asking the why question, sharing your own why. I talk about the 50 million caregivers a lot. And that just gets people to open up and to realize, oh yeah, I had my parent, my grandparent, my friend, my family. I saw what that happened. And you just start having a conversation that way. And then when they think about, should I be planning for myself? They'll ask you that question, right? If you're their financial planner, they'll talk about, should we be incorporating this? And then it kind of flows naturally. And you're not really feeling like a salesperson at all. You're just sharing your story. You're talking about your client's story, and you're helping guide them down a path. And ultimately, we encourage even advisors out there to work with a long-term care specialist to figure out what are the solutions out there in the marketplace. You can obviously do it yourself, but there's a lot of resources out there that help you as well.
What if a client is not open to talking about it? What questions do you ask, or how do you sort of break down some of those walls if for whatever reason they have those up? Like I remember when I was an advisor, there were comments where I'd like to believe they were joking comments, but I feel like it's someone's kind of self-deprecating humor to, take this seriousness out of the conversation. But there was instances where, well, if I ever, need long-term care, just take me out back and get rid of me, and people kind of joke like that. But how do you bring them back in and break down that wall?
Yeah, there's a lot of denial. I would say it happens a lot less today because of all the personal experiences now, but you still hear it. And from my perspective, and this is the statistic, on average, it takes about 18 months before someone actually forms a financial plan for long-term care after they learn about it. It's a long process, a long sales cycle if you're an insurance agent. And 40% of all of our cases are clients that approached us more than 2 years ago about long-term care planning. So you just have to be in it for the long run and drip on people. They may not be ready yet, but if you do, monthly education, you can incorporate this to your education. And as soon as they have that personal experience, light bulb goes off, right? So that's what I would recommend, is you just kind of have to be there. You don't have to be pushy about it, right? You just kind of have to remind them and let it flow naturally. I think, there's a lot of other techniques you can use, but that's probably the very best one, is to make sure that you don't drop the subject, but you're not too heavy-handed about it.
So when someone opens up, they share a personal experience, then it's a matter of, for lack of a better way to put it, but like creating the case or creating the outcome that they're hoping for in the event that they need to go down that path of long-term care or having long-term care needs. What are some additional questions that the advisor can ask to get a 360 view of what that person wants in that unfortunate scenario?
Yeah, I would say you want to know what your wishes might look like. So if you want to stay at home, and a lot of people want to age in place, you want to let your potential caregivers or the people overseeing your caregiving, like your kids, know about that, right? So you kind of want to picture what your ideal scenario is. Some people want to live in a community environment. And so that can start to get you to picture, okay, once I'm in retirement, how do I want to be in the right environment where I'm going to get the right quality of care? And then the people that are managing your care will actually know your wishes. God forbid you have, Alzheimer's disease or cognitive impairment. You may not be able to convey that, right, at that stage. So you want to make sure you do that as a written plan. And just like you might be doing a written financial plan for your clients, you want to have a written long-term care plan. You want to decide who's, the healthcare proxy, who's going to be your financial power of attorney, all of those things that are part of the standard planning process. Incorporate long-term care into that process. And then, again, walking them through the planning itself will involve, okay, well, if you're in that environment, what might the cost of that look like to get professional care, right? And again, it's not that your family won't be involved. They'll just be overseeing those professional caregivers. If it's at home, you can look up, there's a number of surveys, one from Genworth, you can just Google search Genworth cost of care. What does that care look like today? They show the median costs, and then you can also look at what higher end costs might look like. What does that look like 30 years from now? And we talk about inflation a lot in today's environment with financial planning. Long-term care services have even greater inflation than a lot of other services because the reality is there's a shortage of high-quality caregivers and there's a shortage of high-quality facilities. So we're seeing inflation rates on long-term care, home health care, assisted living going up 5-6% compounded annually. When you go out 30 years, you need to project out what that cost is going to be. Yeah. And then the financial planner, probably one of the biggest mistakes we've seen being made is underestimating what that cost is. When you actually see what that looks like, financing that or using insurance makes a lot more sense because it's not something that a lot of people can self-fund. And even if they could, if you can get a lot of leverage on the insurance product, you'd rather be able to write that check today as opposed to writing something, 10 or 20 times higher when it happens in the future.
So let's talk about funding mechanisms. So the two that come to mind, and I don't know if they're the only two or if there's more, but it's self-funding through, your years of saving and whatnot. And then there's insurance products. Am I missing anything that are options?
Yeah, well, let's talk about the ones that are not options, but people think are options.
Okay.
So a lot of people think that Medicare, which is health insurance when you turn 65, is going to cover long-term care. And it explicitly does not. They have a small benefit if you have a hospitalization and you need like rehabilitation for 20 days, or up to 100 days after that hospital stay. But that's not long-term care. Long-term care is usually expected to last at least 3 months, at least 90 days. And the average when you're on claim for 1 year is probably about 4.5 years for women, 3.5 years for men. So you're really planning for a multi-year, type of scenario there. So Medicare doesn't cover long-term care. Medicaid, right, as many of you know, you have to spend down most of your assets and there's income limits to accessing it. And you're not getting the quality of care you want, right? It's government provided. And that's what not most people want if they're planning, right? So that's where you come down to, there's really two private options, right? And insurance is one of them. Self-funding is another option. And there's a few other things you can do, like tapping into your home equity with a reverse mortgage might be a good idea. But again, more in a crisis situation or to tap into it as a financial planning tool, maybe to use those funds to purchase long-term care insurance, that type of thing.
Yeah. And I feel like I know me personally, not only do I want to have enough money to be able to live the life that I want to live, but also leave a legacy, and not properly planning for that long-term care situation can drastically eat away at whatever legacy that you plan to leave behind.
That's right. And you don't want your family to think of you in that fashion, right? You'd rather their memory of you to be, okay, the person that was in control, that had their plans in order, that had professional care, and the family doesn't need to see, the nitty gritty as to what's going on there.
Yeah. Now, furthermore on long-term care insurance, and I know we talked about not getting into the details of particular products, but if it brings us in that direction, feel free. One of the things that I remember when I was an advisor was the insurance premiums would experience some pretty big upticks, over the years. And, if I'm someone who eventually is living on, basically a fixed income, and perhaps that's a worry of mine, how do we plan for that? And that was, probably 5 or 6 years ago since I've been an advisor, and maybe it's changed, but how do you help folks think through that possibility?
Yeah. And the good thing about today's market that differs from even 5 or 6 years ago is there's a lot more options. And when I mean that, there's a lot of different types of products now. So when I talk about long-term care insurance, your mind might immediately go to standalone traditional long-term care. My mind goes to 8 different types of products. And the standalone is still a really important product. I would say those products are actually safer today than they've ever been before, because the carriers that have kind of become the leaders in the marketplace have a lot of experience with it now. And so they've more conservatively priced it. The likelihood of a shockingly high rate increase is a lot lower. They've just kind of de-risked the product, and therefore they've de-risked, the expectations on having a rate increase. That being said, there's also a lot of guarantee options that have emerged. Life insurance-based options are typically guaranteed premium. You can do a prepayment of a standalone policy. So you can pay the premiums over 10 years, and then you never have to pay a dime. Therefore, you can never get a rate increase, after the first 10 years. So they have guaranteed premium standalone options now. And they have lump sum options, which are quite valuable as well. So you just have a variety. You just have to think about what's the total outlay of premium, and am I comfortable with the pay-as-you-go model with my client, or am I comfortable prepaying the premium? If you're comfortable prepaying, then you actually have a whole wide variety of options that don't have that risk on the table at all, but still have the leverage and a lot of the benefits you're looking for.
And I think the likelihood that someone actually uses their long-term care policy is pretty high. What are the current stats on that, actually? Do you happen to have that in terms of percentage of folks that will experience a long-term care need?
Yeah, it's pretty scary. I mean, we talked about over 50 million family caregivers today. Probably one out of every 2 people is going to have an extended care event lasting at least 90 days. It could be an end of life type event, but it's still something that you're probably going to want to plan for. In a married couple, you can picture, one of those 2 people, there's a high probability that one or both of them will need it. It's definitely worth planning for statistically. What it comes down to is looking at the premium cost versus what total benefits you can get from the insurance policy, and just comparing that to self-funding. And a lot of times we're seeing that equation looks better on the insurance side. In certain situations, looks better on the self-funding side too. So when you do that comparison, it's not about, am I buying insurance? It's about how are we funding this? And then you can say, okay, do we want A or B? I'm not going to do anything. Because sometimes people say self-funding, and it's a euphemism for, I just don't want to buy insurance and we'll take it out of my asset when it comes. But that's not planning. That's hope. Hope isn't a plan there.
So if I'm the eternal optimist and I say, well, sure, there's a 50% chance that I'll need this, but there's also a 50% chance that, I won't. And, one of my concerns is then, well, what if I pay these premiums and never need it? Are there products in the marketplace now to where there's a benefit that can be accessed even if there is not a need?
Yeah, there absolutely is. There's quite a few, actually. Anything that's a hybrid product, whether it's a life insurance-based hybrid product or an annuity-based hybrid product, generally speaking, if you don't use long-term care, the worst case scenario is you get at least your premiums back.
Okay.
That's a nice peace of mind that, hey, the worst situation here is you haven't spent any money. They're just using the interest, right? The opportunity cost to fund the insurance itself. The reality, though, is that a lot of people are planning not because of the statistics that they're going to need it. They just don't want the negative consequences to happen to their family if they do, right? So it's more about like a life insurance or disability type of planning process, which is, I don't want this to happen to my family. The reason I bought my policy, and I'm 39 years old, was because I wanted to give a gift to my wife. So you mentioned what are reasons outside of like denial it's going to happen to me to do it. I can't tell you how happy my wife was when I got my long-term care policy. right? Because she is not going to have this fear that if something happens to me, it could be a car accident, right? That she's going to be burdened with having to be the one to provide that care for me. So when you think about it as a gift, right, to your family, and obviously you want to get a good value proposition, you want the insurance to provide leverage for you, but ultimately, whether it happens or not, we hope it never happens to us. I still am happy that I have the policy, right? Because if it does, the consequences for my family aren't going to be as devastating.
I'm curious to know if you feel this the same way. So I currently have a small long-term care policy, nothing overly meaningful. It was more so just to say I had it. But I do have the most amount of disability insurance that an insurance company would take care of, and the most amount of death benefit in life insurance that insurance companies would give, where it wasn't even like as a part of a plan. It was just, how much will you give me? And I'm 32 currently. And I don't know if you feel this way, but for me, when you're properly insured and you have that insulation, if you will, there's a certain sense of like fearlessness that I have where it's like, hey, no matter what, like everyone around me is taken care of. And it's a pretty rewarding feeling when you view insurance the way in which you just mentioned, as opposed to, oh, this is an added cost, like a lot of people view it.
Right. That's right. And even if, it's standalone option, and it's a few $100s a month, right? Which is a realistic cost for people. It's not as expensive as you might think. When you realize that peace of mind that you mentioned that you're gaining. And the fact is, when you plan younger, like you did when you're younger, you're just getting a ton more value because of your good health, oftentimes, and because you have time to let the benefits actually grow. The insurance companies, in a lot of cases, are growing the benefits with compounding inflation built into the policy. So when you look at those future benefits, you're actually getting a surprising amount of leverage. One of the best deals I ever saw was my younger brother, actually. He's in Washington State, where they had a mandatory payroll tax. And then, people were buying long-term care to be able to opt out of a payroll tax. He ended up buying a comprehensive policy, not just a minimum policy, because he got like a phenomenal deal from the insurance company when you look out 40 or 50 years because of the growth in the policy itself. And then, as a financial planner, when you think about, some of the risks of timing, right? If you have to take a withdrawal out of your retirement accounts, at certain time sequence of returns, it can lead to really bad outcomes for your retirement plan. Having the insurance there is almost a diversifier, a hedge, where that's going to pay it instead of it withdrawing out of your retirement account at the wrong time.
For sure. I think we'd like to believe that all advisors would be open to having this conversation. And it can be a challenging conversation because it's not necessarily a pleasant one, right? So it's easy to avoid this, right? Mm-hmm. And we'd like to believe that advisors would have these conversations because it does benefit the client at the end of the day. However, there's also a lot of people where they run on incentives. What's in it for me, right? Mm-hmm. So let's take the altruistic view out of the equation for now and say, okay, well, what is the opportunity for the advisor to have these conversations? And you alluded to earlier about the opportunity for generational type of stuff. So help unpack what that opportunity is.
Yeah, I would say long-term care planning, one of the reasons that I'm involved with it is it's probably one of the best relationship building tools that you can imagine. And I'm a big believer in offering products in a economically sustainable way. I call it sustainable business, right? You can't be charitable with all of your time or you're not going to grow your business. So you have to figure out, how do you incorporate this planning into your business where it's going to help you grow? And from our perspective, it's probably one of the best tools to attract new clients that you can imagine. You want to make sure that you understand the solutions and where they're going to fit with your clients when they ask for it. And who are you going to go to? Are you going to offer it yourself? Are you going to work with a specialist to do it? But let's say your client says that, yeah, I'm taking care of my parents. What do I do? As an advisor, that might make you feel uncomfortable. Who do I go to? We have community partners that we can go to that actually help family caregivers. And it's a really clean handoff. Really low cost, right? Because fill out a form, it goes straight to them. We know it's being picked up, the client's being taken care of, and we're tying that relationship to the advisor still. So once that client has their crisis handled and they come back to you, do you know how grateful they are? Do you know how much the more they value you and your relationship with them, that you've solved this important problem for them? So from my perspective, that's probably the best way to attract clients and the best way to get referrals is by building a relationship around making sure long-term care planning is a part of your overall financial planning. Because guess what? Other advisors are not doing today. Most advisors are not talking about this. So it's a great differentiator. And ultimately, it's altruistic, but you're going to grow your business and you're going to see the wins happening almost like marketing, effective marketing. It's going to be happening for you because your clients become your advocates.
That makes sense. I wish I remember the exact stats, but one of our partners and good friend of mine, Dan Allison, he through his talks that he shares an example around if you were to implement long-term care throughout all of your client relationships or not, it's basically you're grossly underinsuring your own book of business and the assets that you're managing, because if you don't have a plan, which oftentimes it results in having some sort of insurance, then when they have that event happen, they're drawing down on the assets that you're managing. So not only will they need those and you're not managing them now, but when ultimately they do pass, there's not as much assets to leave to that next generation. So it's almost your business can cannibalize itself if you're not having those conversations now. And he says it so eloquently, and I can't remember it, but the gist of it is, have these conversations. Otherwise, it's a business risk for you long term as well.
Yeah, you bring up a lot of good points with that. Absolutely. Your AUM, right, suffers because, you're the one that's, going to have to pay that out of your retirement savings instead of having the insurance dollars paying it on pennies on the dollar there. But also, when you talk about generation wealth transfer, long-term care is largely a female issue. And the reason I say that is probably 70% of caregivers are women, most commonly daughters or daughters-in-law or wives. And also, females have longevity and they're tending to be in care longer. Like I mentioned, the statistic, right, is females have longer risk of needing care themselves. So when you think about generational wealth transfer, a lot of times it ends up being the female, the matriarch in the family that is getting that wealth. And a lot of advisors aren't doing as good of a job building the relationship with that spouse. By getting long-term care, like I said, I did it as a gift to my wife. If your client is doing it as a gift to their spouse and their advisor is encouraging that, you're actually building a relationship with the other family members involved who may be the ones inheriting that generational wealth.
Love it. I think this is something where I would venture to say anyone listening to this podcast can point to a personal scenario where care has been needed and it probably hasn't gone as good as it could have gone from a care perspective, a funding perspective. So I think this is something that we definitely need to start talking about more as advisors. And we'll get into, how you're positioned to support advisors. But before we do so, I want to pivot slightly. So one of the questions, if you're listening to this episode for the first time, that we ask all of our guests is a book that's had an impact on them. And we do so as a way to kind of distill a reading list for folks and encourage reading outside of the industry. And Mark, I know you have a number of books behind you on your shelf, but the one that you mentioned that you wanted to talk about briefly is The Snowball, which is Warren Buffett biography. Why'd you pick that? What's the impact that it's had on you?
I've always found Warren Buffett to be one of the most interesting investment characters of our time because he just drowns out all of the noise, right? It all comes back to fundamentals. And that's what I believe in too, is like everything, if you tie it down to fundamentals, you're going to have a solid business. You're going to make good recommendations to your clients. And so, that book, it talks about, Warren Buffett's philosophy around how he develops his value-oriented investment approach, how successful he's just been with his track record. And you just see him, like, I actually played bridge with Warren Buffett and Bill Gates because I was a bridge player back in my college days.
Oh, no way.
And you just see him eating a popsicle at a bridge tournament, like just carefree, nonchalant, really accessible, right? One of the richest men in the world, right? And you're like, that's what's important at the end of the day. It's not about his wealth. He doesn't care about how much wealth he has. Other people are accounting for him, but he's living his best life. He's over 90 years old now and, still drinking his Coke and doing all that kind of stuff and playing bridge. And, that's what you want to be. Ultimately, I think financial planning, and a lot of people I'm sure can attest to this, it's about maximizing your happiness quotient, right? Doesn't matter how much money you leave the earth with. But if the things that we're doing here are going to maximize your happiness, like protecting against long-term care is going to maximize your family's happiness, even if you have to, pay some small margin to the insurance company to get access to that product, that's really what's important to you and to your clients. And I think Warren Buffett kind of embodies that, right?
So what you just did there is the exact reason why we have this segment to the show. I find that a lot of folks can get kind of stuck in the industry and reading industry publications and consuming industry content, but there's so much more information outside of the industry's walls that can in turn be applied to what we do on a daily basis. And you just articulated that perfectly to kind of prove the point as to why we do this segment. So I appreciate that.
Yeah.
So if I'm someone listening to this and I'm either already having these conversations and I would like to get some help, or this is a brand new conversation and I don't even know kind of where to start, how do I get in touch with you to learn more about how you support advisors?
Yeah. And so the great thing about BuddyINS is we are a community of long-term care planning advocates, and there's no obligation to work with us. Nobody has to change contracts to work with us. What we want you to do is plug into that education. So if you go to our website, www.buddyins.com, and there's a partner side of that website, just say, join the community, put in your information. We'll invite you to our weekly study groups, to our webinars, be on our newsletter list to get the education. We believe education and awareness for long-term care planning should be free. And that's really what limits us with planning, is people just don't understand it. There's a lot of misconceptions. In terms of how we do business and partnering with us, typically we are actually a licensed agency in all 50 states, and we partner on the application with financial planners, with long-term care specialists, and we actually vet a large network of long-term care specialists that know all the products, are underwriting experts, are full-time doing that business. And that's led to a lot of good outcomes for clients. So whether you want to do it yourself, whether you want to work with a specialist, really there's no constraints to how to work with us. And at the end of the day, where we're spending time with you, that's generally where we are splitting on applications. And so it's kind of aligned well with your interests.
Well, what I like about that model is it's education first. It's giving away value for free, building a relationship, through those interactions, through that content. So it sounds to me like there's no risk to go and start consuming content and building a relationship. So if you want to learn more about this area, you want to elevate the knowledge that you already have, definitely go check that out. But Marc, it was a pleasure. I know we had to reschedule this a time or two based on some things that came up on both of our ends. So I appreciate your flexibility and glad that we finally had a chance to do this.
Yeah, David, thanks for having me on, and really appreciate sharing the message of long-term care planning.
Awesome. Take care.